Uber reported their latest quarterly figures before the market opens. It was a pretty strong quarter. Couple of misses here and there, very small ones that had to do with the FX headwinds. Right now, at the time of making this video, stock is down 4.6%, but year to date, it's still up closer to 30%, so one of the better performers for the year. So what exactly has happened? Let's go over everything you need to know from Uber's latest quarterly figures and commentary from management as well. If you enjoy this type of videos, hit all the buttons. We really appreciate that, especially those of you that are watching the videos but are not subscribed. That's almost 55% of you. So hit that subscribe button, and that way we're getting much closer to 90,000 and then 100,000 subscribers. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so let's have a look at the misses and beats. Lots of beats under the revenue line right here. So most of it has to do with FX headwinds. Now, gross bookings, miss of 0.7%, revenue miss of 0.7% as well. Very, very small misses that still increased 13.7% year over year. As for EBITDA, that was a beat of 1.2%, and that's up 35.2% year over year. EBITDA margin is up 256 basis points year over year. That was also a beat of 31 basis points to reach 16.2%, with a big improvement coming from delivery. That's up 377 basis points, a beat of 68 basis points to reach 20.2%. Free cash flow was a beat of 62.5% to reach $2.25 billion, and that's up 65.6% year over year. EPS came in at 83 cents, also a beat by 62.7%, also a beat of 62.7%, although that was positively impacted by one-time tax benefit. If you remove that, would have been a smaller beat. As for monthly active users, that increased 14.1% year over year. That was also a beat of 1.2%. Trips beat by 1.8%, and that increased by 18% year over year. If you look at Q2 guidance, a double beat here for gross bookings and EBITDA as well. Gross bookings is expected to grow 16.4% year over year, and EBITDA 31.8% year over year. So this is basically what we got right here, and this is the big difference, right? We're going to see this in just a bit. Gross bookings grew 14% year over year, or 18% on a constant currency basis. So quite a big difference here. Because if we look at the trend, we can see that this is the first quarter since coming out of the pandemic that we're down quarter over quarter. But here, again, the strong dollar reduced reported growth by about 4.5 percentage points in Q1. Looking at free cash flow, as we've seen, that has increased 66% year over year. And if we look at the trailing 12 months, we can see that free cash flow is currently at $7.786 billion. That's very impressive, especially for a business that some might say is going under. Well, so far, I like this business going under by going up and up and up. Mobility highlights. Gross bookings here as well, down quarter over quarter, but growth on a constant currency basis is up 20% year over year. Revenue on a constant currency basis is up 18% for mobility, and an adjusted EBITDA margin of 8.3% for the quarter. Adjusted EBITDA was $1.753 billion for mobility. As for delivery highlights, that increased 18% year over year. Gross bookings on a constant currency basis. Revenue up 22%, and adjusted EBITDA was $763 million with a margin of 3.7%. Looking at freight, that's the segment that is coming down a little bit every single time. $1.26 billion in revenue, that's down 1% year over year. Adjusted EBITDA still a loss here, although quite close to being break even. And so this is basically what we're getting here from the trends. If we zoom out in the last 3 years or so, mobility revenue increased at a compound annual growth rate of 37.1%, delivery 14.5%, and freight revenue is, it hasn't grown, so it's down 11.6%, or actually 30.9% since the March quarter of 2022. If we go and look at adjusted EBITDA for each and every segment since the March quarter of 2022, so in the last 3 years, mobility is up 183.6%, or has grown at a compound annual growth rate of 41.5%. But then if we look at delivery, that has grown at a compound annual growth rate of 193.8%, or that has grown 2,443.3% since. Looking at total trips, that has grown at a CAGR of 21% or 77.2% since the March quarter of 2022, and last quarter that did increase 18% year over year. Now they said the following: Uber is best positioned to capitalize on the global on-demand local commerce opportunity. They say here market leadership, global leading delivery player operating in over 30 countries and 8 category leading positions in top 10 countries. They've seen $82 billion gross bookings, ARR, that's up 18% year over year. As for profitability, $3.1 billion adjusted EBITDA ARR, that's up 45% year over year in Q1. They're pursuing massive opportunities in local commerce through new products and tech. So we've got the consumer side of things and the merchant side of things. On the consumer side, we've got the restaurants, whether it's groceries, then convenience, alcohol, pet, home improvement, electronics. Uber wants to play a part there. So yes, they're going to be, let's say, competing with the likes of an Amazon, for example, because if you go on the Uber app and you're looking for any of these things, well, it will be there. Then as for merchants, you've got the Uber Eats marketplace, whether it's direct, pickup, dine-in, advertising, offers, data analytics, they provide it all. They saw around $10 billion run rate grocery and retail gross bookings. Moving on to the autonomous vehicle part of things. This was a slide from 3 months ago, just so I can show you again the Uber partners and the potential future partners. This is basically it right now. More recently, we actually had a couple of announcements being made. Now, some say, okay, autonomous vehicles opportunity, great. But how is that going to help a company like Uber? Well, this is just for the United States, their projections. It's over $1 trillion opportunity that autonomy can unlock in the United States only. You might say, okay, great. But as the cost per mile goes down, how is Uber expected to make more money? Well, as we've seen with others, cost can come down, but volume will be up, right? It's the same thing here. Selling something for $2, but you only sell 5, or selling something for $1, but you sell 10, you get the same thing. But what if you can sell 20? You basically doubled. And then they said the following: with regards to advertising, Uber's ad business surpassed $1.5 billion annual run rate. That's up 60% year over year, with strong growth in both delivery and mobility. Autonomous vehicles, Uber now has 18 AV partners globally and has launched successful AV services in Austin with Waymo and is expanding to more cities and partners, including Volkswagen and Pony AI. This was a most recent announcement. The company is seeing very high utilization of Waymo vehicles in Austin, with the average Waymo being busier than 99% of Austin drivers. That's very good for Uber, very good for Waymo as well. They're also expanding into retail categories and recently acquired Trendyol Go in Turkey for $700 million. I believe they didn't acquire 100% of the company. I think it was closer to 85% or something like that. So to me, it's pretty simple. Uber is growing. Uber is becoming more and more profitable. They are making very, very interesting and, well, strategic moves to position the company very well for a future that will be autonomous, but it's not only focused on that. If we go back and look at the different segments, right? Mobility and delivery, that's the two largest segments here. We can clearly see that delivery is a very, very big deal for them. It's not just mobility that's going to grow, continue to grow, but the delivery side of things, especially when we look at adjusted EBITDA, that's one that is growing quite quickly. And again, if you can continue to provide the best platform, the best distribution network for everyone involved, why would anyone go anywhere else? To me, just doesn't make much sense. And that's why I still believe that Uber is going to be quite a big winner in the future, whether it's because of autonomous vehicles, whether it's because of robotics, etc., which, by the way, for the first time ever in Miami, I saw a Serve Robotics delivery bot. Very cute thing. And so overall, that's about it. And right now, at the end of the video, the stock is only down 1.1%. So clearly, the market needed some time to digest the results and say, actually, this is a very, very good company that is still growing and that is becoming more and more profitable. And it's strategically placing itself for a successful future as well. So all in all, that's about it. I still remain very, very bullish on Uber. Share your thoughts down in the comment section below. Like, subscribe, all of that. And I'll see you all in the next one. Bye-bye.